Joining us now to discuss BTC price is Bitwise Asset Management Chief Investment Officer Matt Hougan. Hello there, Matt. Thanks for joining us. So, what is behind this plunge?
Yeah, this plunge is all about the Fed. It has nothing to do with what's going on in the underlying crypto economy. The broad capital markets are reflecting on the fact that Chairman Powell's commentary yesterday was actually quite hawkish. They realize that he's looking at some relatively short-term transitory drivers of inflation and projecting those to continue. And so the Fed is going to, at the current path, drive us into a recession. And I think you're seeing a sell-off in the capital markets for that reason. I don't think it is anything crypto-specific. Crypto is just a risk asset. And so when the market goes risk off, you see these kinds of sell-offs. That's what we're seeing today.
So we're seeing that Bitcoin is reacting very closely to the markets, but often there's that argument that Bitcoin is not supposed to act like the markets, like traditional equity. So where do you see this heading? Do you see a decoupling happening more longer term, or do you see this continue with whatever the market moves?
It's a great question. There's absolutely going to be a decoupling longer term. In fact, even if you look historically, what we're seeing play out today is what's played out in the past, which is during sharp risk-off corrections, crypto trades in line with other risk assets. But over long periods of time, you see the secular drivers of crypto overwhelm. That's why crypto's long-term correlation to stocks remains very low, even though during these high-stress macro moments, it gets higher. Look, eventually we're going to normalize from a macro perspective. Eventually the market is going to accurately say what the Federal Reserve is going to do in the future. And at that point, the underlying fundamentals of crypto will come back and will drive the market, and I think drive it higher. I actually thought there was an interesting moment yesterday during the brief bullish 2-hour period after the Fed's press conference, where you saw Bitcoin and crypto surge higher and faster than the rest of the market. I actually think crypto is somewhat of a coiled spring. The underlying fundamentals are so very strong. The regulatory progress is so strong. The venture capital investment is so strong. The development activity is so strong. It's just being suppressed by these broader market conditions. Once those normalize, I think we'll see crypto be among the highest bouncers, the fastest movers on the upside. But right now, the Fed is in control. Macro forces are in control, and crypto is suffering as a result.
So in your view, what is the best strategy to navigate this volatility?
Yeah, you should expect this volatility to continue. So that's one message I want to be clear for. We aren't past the point where the market has fully intuited what the Fed is going to do, and there's still big macro risks on the horizon. But I do think this is an interesting opportunity for long-term investors. Crypto has actually held up reasonably well, considering the shock to the macro system. And I think things like what we saw yesterday, where it bounced very far, very fast, shows what's going to happen once those macro conditions normalize. So expect there to be another month, another 2 months, another period of volatility. But the long-term outcome on the other side of that, I see as very positive. And I think we've seen multiple indicators that point us in that direction. So for long-term investors, a good time to buy. For short-term investors, expect more volatility.
So you mentioned that there's going to be a decoupling between Bitcoin and the markets in the future. But because there has been so much VC investment, because there has been so much investment by institutions, do you think because of that market now invested in Bitcoin that it will move more like tech and risk assets?
I actually don't. I don't, and for this reason, the fundamental drivers of crypto are just different than the fundamental drivers of traditional stocks. Stocks are driven by earnings, by tax policy, by global economic growth. Crypto at this point in its development is still driven by regulatory progress, by entrepreneurs developing new ideas and applications, by education, by trends that just move to a different drummer than what drives the stock market. So while it is true that more institutional capital is coming in, well, I expect that will reduce the volatility of crypto in the future to some degree. It's still the case that the fundamental drivers of crypto are simply different than the fundamental drivers of stocks. And as an investor, you're trying to build a portfolio of assets that are driven by different factors so that over the long term, they zig and zag at different times. That's still true for crypto. I think that's going to be true for at least another 5 years until it's truly mainstream. We're still a long way from that point.
All right. And we got to wrap it there, Matt. But just one last question before we do. What is your price prediction next 6 to end of the year for Bitcoin? 6 months to the end of the year.
Oh, a great question. I'm very bullish for the end of the year. I think we'll move, back towards the highs that we saw earlier this year and the late part of last year. Bitcoin, in a sense, is developed for this moment in the market. What we're seeing is the Fed losing control of the economy. We're seeing the Fed trying to weigh inflation against recession. It puts them in a real bind. Bitcoin is made for that moment. It's an alternative monetary system. And I think once we get past this short-term volatility, it's going to be a very strong market for crypto in the second half of the year.